Mastering Personal Finance and Investments, your guide to financial freedom. Greetings. Welcome episode of the Mastering Personal Finance and Investments podcast, your ultimate guide to taking control of your finances and achieving your financial goals. Whether you're navigating the complexities of budgeting, exploring new ways to invest, or looking to improve your credit score, this podcast is designed to help you build a solid foundation for your financial future. In this episode, we'll cover the latest trends in personal finance, investments, student loans, and much more. Stay tuned for practical tips that will help you make smarter decisions and unlock your financial freedom. Disclaimer: the content in this podcast/video is for informational purposes only and does not constitute financial, investment, tax, or legal advice. Always consult with a qualified professional before making financial decisions. Personal finance and budgeting. Actionable tip: start by tracking your expenses. Utilize budget apps like Mint or YNAB to gain insight into where your money is going. Emerging trend: increasing popularity of digital wallets and cashless budgeting tools. Real-life example: many people have seen tremendous benefits by implementing the 50/30/20 rule for budgeting. Allocate 50% to necessities, 30% to discretionary spending, and 20% to savings. Student loans and debt management. Actionable tip: explore income-driven repayment plans if you're struggling with federal student loans. Consolidating loans can also help simplify payments. Emerging trend: the rise of debt settlement programs and loan forgiveness for public service workers. Real-life example: Sarah, a graduate in her 20s, reduced her monthly payment by 30% through an income-driven repayment plan, giving her financial breathing room. Mortgage and home loans. Actionable tip: shop around for the best mortgage rates. Consider a 15-year fixed mortgage over the standard 30-year to save on interest in the long run. Emerging trend: more people are opting for adjustable rate mortgages, ARMs, as interest rates rise, but ensure you understand the risks involved. Real-life example: John refinanced his mortgage during the lowest rate period and saved $300 a month on his mortgage payment, giving him extra funds for investments. Credit cards and rewards. Actionable tip: maximize your rewards by using credit cards that offer high cashback in categories you frequently spend in, such as groceries or travel. Emerging trend: the growing popularity of no annual fee credit cards with increased reward flexibility. Real-life example: Lisa used her credit card's travel rewards points to book a round-trip flight to Europe, effectively saving over $500. Investing tips. Actionable tip: start investing early in index funds and ETFs, which offer low fees and diversified portfolios. This long-term approach can reduce risk and increase returns. Emerging trend: increasing adoption of ESG, environmental, social, governance, investing, where investors prioritize ethical companies. Real-life example: Mark invested in a low-cost index fund for 10 years, seeing his portfolio grow by 8% annually, helping him build a comfortable retirement fund. Cryptocurrency investment and trading. Actionable tip: do your research before diving into cryptocurrency. Consider using platforms that offer educational resources and risk management tools. Emerging trend: the rise of decentralized finance, DeFi, platforms, where people can lend or borrow crypto assets without intermediaries. Real-life example: Jane started investing in Bitcoin when it was $10,000 per coin. Today, her investment has grown significantly, underscoring the potential for high returns in crypto markets. Insurance, life, health, car, home. Actionable tip: ensure you're adequately covered without overpaying. Comparison websites can help you find the best rates on life, health, and car insurance. Emerging trend: the shift toward digital-first insurance companies, which provide more affordable and accessible coverage options. Real-life example: Tom saved $600 a year by switching to a digital-first car insurance provider, while increasing his coverage to include roadside assistance. Retirement planning and investment. Actionable tip: contribute to retirement accounts like 401(k)s and IRAs regularly. Maximize employer matching contributions to take full advantage of free money. Emerging trend: the rise of Roth IRAs, which offer tax-free growth and tax-free withdrawals in retirement. Real-life example: Emily started contributing to her 401(k) in her early 30s. By the time she turned 60, her retirement fund had grown significantly, helping her retire comfortably. Loans for bad credit. Actionable tip: consider a secured loan if your credit score is low. This allows you to borrow money by offering collateral, such as a car or savings account. Emerging trend: the growing popularity of peer-to-peer lending platforms, which can offer loans to individuals with less than perfect credit scores. Real-life example: David, with a credit score of 550, was able to secure a loan through a peer-to-peer lending platform with a manageable interest rate. Financial planning and wealth management. Actionable tip: develop a comprehensive financial plan that includes short-term and long-term goals. Consider hiring a certified financial planner, CFP, for expert advice. Emerging trend: more people are turning to robo-advisors for affordable wealth management services that use algorithms to manage investments. Real-life example: Sarah used a robo-advisor to diversify her portfolio across different asset classes, leading to consistent growth. 51 Personal finance and budgeting tips. Start budgeting early. The key to financial success is budgeting. By tracking your income and expenses, you can make smarter decisions and avoid overspending. Create an emergency fund. Set aside 3 to 6 months of living expenses in a high-yield savings account to protect yourself from unexpected situations. Track your spending. Use apps like Mint or YNAB to get a clear picture of where your money is going each month. Pay yourself first. Before paying bills or shopping, put aside savings. Treat it as an essential expense. Automate savings. Set up automatic transfers from your checking account to a savings account or retirement fund to ensure consistent savings. Understand your credit score. Your credit score affects loans and credit card interest rates. Check your score regularly and address any issues promptly. Reduce credit card debt. Paying off high-interest credit card balances should be a priority. Consider transferring balances to a lower-interest card if possible. Refinance high-interest loans. Refinancing can help lower your monthly payments and reduce interest on student loans, mortgages, or auto loans. Shop around for insurance. Whether it's car, life, or health insurance, comparing quotes can help you get the best deal. Take advantage of employer benefits. Contribute to your employer's 401(k) or pension plan, especially if they match contributions. It's free money for your retirement. Use cashback credit cards wisely. Choose credit cards with rewards that suit your spending habits and avoid carrying balances to maximize cashback. Consolidate debt. If you have multiple loans, consolidating them into one can lower your monthly payments and reduce interest rates. Set financial goals. Short and long-term financial goals provide motivation. Whether it's saving for a home or building an emergency fund, define what you want to achieve. Diversify your investments. Don't put all your eggs in one basket. Diversifying investments across stocks, bonds, and real estate can reduce risk. Start investing early. The earlier you start investing, the more time your money has to grow. Consider using retirement accounts like 401(k)s or IRAs. Understand risk and return. Higher returns generally come with higher risks. Know your risk tolerance and invest accordingly. Use tax-advantaged accounts. Maximize contributions to tax-advantaged accounts like Roth IRAs, HSAs, and 401(k)s to reduce taxable income and save for retirement. Review your credit report annually. Free reports are available once a year through annualcreditreport.com. Regular reviews help identify potential fraud or errors. Build multiple streams of income. Look for opportunities to earn extra income, like freelance work, renting out property, or investing in stocks. Save for college early. Consider setting up a 529 plan for education savings, which offers tax benefits for both you and the student. Automate debt payments. Set up automatic payments for any loans or credit cards to avoid late fees and maintain a good credit score. Take advantage of financial apps. Apps like Acorns or Robinhood allow you to invest spare change or buy stocks in increments, helping you start investing with little effort. Understand mortgage options. Research different mortgage types, fixed rate, adjustable rate, to choose the one that best fits your financial situation. Review your bank statements. Regularly reviewing your bank and credit card statements can help identify errors and unnecessary subscriptions. Refinance your mortgage. If mortgage rates drop, consider refinancing to lower your monthly payments or shorten the term. Plan for retirement early. The earlier you start contributing to retirement accounts, the more you'll benefit from compound interest over time. Use coupons and discounts. Always check for discounts, promo codes, and rebates before making purchases, whether online or in-store. Live below your means. Prioritize saving and investing by living frugally. Avoid lifestyle inflation even as your income increases. Emergency fund over luxury spending. Put off buying luxuries and focus on building an emergency fund to avoid financial stress during crises. Create a debt repayment plan. Use the debt avalanche, paying off highest interest rate first, or debt snowball method, paying off smallest debts first, to tackle debt efficiently. Contribute to a health savings account, HSA. If available, contribute to an HSA to cover medical expenses and enjoy tax benefits. Don't ignore your taxes. Tax planning should be part of your yearly strategy. Save receipts and consider speaking with a tax professional. Be cautious with payday loans. Payday loans have extremely high interest rates. Only use them as a last resort. Invest in dividend stocks. Dividend-paying stocks can provide a steady income stream. Look for companies with a solid history of dividend growth. Don't overdraw your account. Avoid overdrawing your bank account, which can result in fees and negatively impact your credit score. Understand the stock market. Before investing, take time to understand the stock market, how it works, and the risks involved. Get rid of high-interest debt. Focus on paying off high-interest debts like payday loans or credit card balances before investing or saving. Cut unnecessary subscriptions. Review your subscriptions regularly. Cancel any that you don't use or need. Use your tax refund wisely. Instead of spending your tax refund, put it towards savings or pay down high-interest debt. Be mindful of your retirement savings rate. Aim to save at least 15% of your pre-tax income for retirement, especially if you're behind on your savings. Seek financial advice when needed. Don't hesitate to seek advice from a financial advisor, especially for complex topics like taxes, insurance, or investing. Check for hidden fees. Always check for hidden fees in your bank accounts, credit cards, and loans. Fees can quickly add up. Invest in real estate. Real estate can be a great investment. Look for rental properties or consider REITs if direct property ownership isn't for you. Monitor your financial progress. Track your net worth, savings, and investments periodically to ensure you're on track to meet your goals. Be patient with investment growth. Investments take time to grow. Be patient and avoid selling investments during market downturns. Learn the basics of cryptocurrency. Understanding cryptocurrencies can give you a new avenue for investment. But, remember, cryptocurrency is highly volatile. Avoid lifestyle inflation. As your income increases, Keep your lifestyle the same and invest the extra income. Pay attention to loan terms. When taking out any loan, always read the terms and conditions to avoid hidden fees and penalties. Minimize taxes on investments. Make tax-efficient investments like index funds to reduce your capital gains taxes. Establish clear financial goals. Having specific, measurable financial goals will keep you motivated and on track to achieve them. Stay educated about personal finance. Personal finance is a constantly evolving field. Keep reading, listening to podcasts, and educating yourself on new strategies. These 51 tips provide practical, actionable steps to improve your financial situation, save for the future, and make informed financial decisions. Remember, managing your finances is a journey, and the earlier you start, the better prepared you'll be for whatever life throws your way. Disclaimer: the content in this podcast/video is for informational purposes only and does not constitute financial, investment, tax, or legal advice. Always consult with a qualified professional before making financial decisions. The creator is not responsible for any financial losses or liabilities resulting from the use of this information.